We are looking at Rezolve AI PLC, ticker RZLV, which is currently live on the NASDAQ, and the market is very much in motion. The price right now is $3.08 per share. That's a gain of about 1.28% for the day, or just under 4 cents. But that flat number doesn't even begin to tell the real story. This stock is seeing incredible action this morning. It opened significantly lower at $2.71 5/100ths after closing yesterday at $2.97. From that morning low, it has already rallied to a high of $3.06. We are only about 30 minutes into the trading day, and the volume is already explosive, clocking in at 3.67 million shares traded. This is a name that is drawing a massive amount of attention and capital this morning. Now, here is the immediate disconnect: the expectation versus the reality. The expectation for a stock trading around $3 is that it's likely a forgotten, speculative, high-risk microcap. Many investors practicing self-investing might look at this on their Robinhood app or SoFi Invest platform and see it as just another AI company that's burning cash, a leftover from the SPAC boom. The assumption is that it's being tossed around by day traders and has little substance. The reality, however, is that this stock represents one of the most aggressive corporate turnarounds and expansion plans we've seen this year. While retail traders are watching the second-by-second ticks, institutional money, we're talking Fidelity and BlackRock, are building positions, and the company just announced a flurry of news this past week that suggests this $3 price tag is completely detached from their own internal projections. This isn't just a low-float gamble, it's a company in a full-on global blitz, and the market is struggling to figure out if the story is real. Let's establish the common ground. We are all looking for that next big thing in AI. We watch NVIDIA stock and wonder if we missed the boat. We see the volatility in Tesla stock and its AI ambitions. So when a small cap like RZLV comes along claiming to be the backbone of agentic commerce, the skepticism is high. Many investors, perhaps using Schwab intelligent portfolios or other investment help services, are programmed to avoid this kind of volatility. The stock has been all over the map. Just this week on Tuesday, it saw a nasty drop of over 7%, only to be followed by a barrage of press releases that completely changed the narrative. Yesterday was a perfect example of this fight between bears and bulls. The stock traded in a wide range from $2.87 up to $3.33 before settling at $2.97. This morning's action gapping down at the open and then immediately getting bought up with immense volume shows that a serious battle is underway. This isn't the slow, steady compounding you'd find in Fidelity mutual funds or Fidelity ETFs. This is active, aggressive, and volatile online investing. So let's challenge that common narrative. The belief is that this is a speculative gamble. The reality is that this company is executing a plan that is anything but. Let's start with the news from just 2 days ago, November 12th. Rezolve AI announced it had hired a team of senior executives to lead its global expansion. And where did they come from? We are talking about top-tier talent from Apple, Google, Microsoft, and SAP. The new Chief Revenue Officer, Crispin Lowry, was reportedly recruited by Steve Jobs personally to lead Apple's multi-billion-dollar retail expansion in Europe. People of this caliber do not leave secure, high-paying jobs at Apple stock's parent company to join a $3 speculative shell. They join because they are convinced of the technology and the equity's upside. This move signals an intense confidence from industry insiders, a factor that many retail traders using the simple Robinhood stock trading interface might completely miss. This hiring spree was funded by news from November 5th. The company announced it had completed an oversubscribed $200 million financing round. This is absolutely critical. Why? Because the primary bear case against Rezolve was its balance sheet. Old filings, like those from the end of 2024, showed a company with relatively little cash, around $9.5 million, against significant liabilities, over $57 million. Skeptics rightly pointed to this as a major risk, but a $200 million injection, especially one that was oversubscribed, meaning demand was higher than the offering, completely changes that picture. It wipes out the immediate financial risk and gives them a massive war chest to execute their plan, which includes building out a huge sales force in the US and Europe. This is the kind of development that Fidelity Wealth Management and individual brokerage research departments live for. It's a clear material change in the company's fundamentals. This brings us to the core of the RZLV story. What do they actually do? Rezolve AI is not an internal help desk. That's a different private company with a similar name. The public company, RZLV, is focused on e-commerce. They are building what they call the Brain Suite for agentic commerce. The idea is to move beyond simple chatbots. Their platform, using a proprietary AI model called Brainpower, allows their clients, major retailers, to create AI agents that can do things for customers, not just talk. This includes advanced visual search. Take a picture of a coat, the AI finds it in the store's inventory. And conversational commerce, where the AI can autonomously guide a user from discovery to transaction. This is a very real and very complex enterprise-grade AI solution, and they have the clients to prove it. We're not talking about small online shops. Their client list includes global brands like H&M, Ferrero, Urban Fodio, Asos, and Rakuten. These are massive corporations that are already integrating Rezolve's technology. This is where the expectation-reality gap becomes a canyon. The market seems to be pricing this as a $3 stock with a what-if idea. But the company itself, in its October 1st update, raised its 2025 guidance to $150 million annual recurring revenue exit rate and initiated a 2026 guidance of $500 million annual recurring revenue exit rate. Let's be perfectly clear. A company with a $500 million revenue run rate does not typically trade with a market cap of under $1 billion, where RZLV is currently sitting. The market is effectively saying, "We don't believe you." But the company is responding by raising $200 million and hiring Apple's top brass. This is the central tension that defines this investment. So who is buying? This isn't just a retail favorite. We can look at the institutional holdings. As of the last quarter, 112 institutions have filed positions in RZLV, holding over 19.4 million shares. The institutional ownership increased by a staggering 194% in a single quarter. And the names on that list are not small. We're talking BlackRock, the Vanguard Group, Geode Capital, State Street, and even Charles Schwab Investment Management. These are the largest money managers in the world. They are the ones offering Fidelity IRAs and Schwab Intelligent Portfolios. They are not making a quick flip on their Fidelity mobile app. They are taking a calculated, long-term position. This signals that the smart money believes the reality, that $500 million ARR target, the new hires, is more likely than the expectation, the $3 share price. This is a level of institutional conviction that you simply do not see in a typical speculative stock. Let's talk about the future outlook and the risks, because no online investment is a sure thing. The risks are still very real. The primary risk is execution. The company has set an incredibly high bar for itself. Promising $500 million in ARR is one thing, delivering it is another. They are in a high-growth, high-burn phase, and they must now convert that $200 million in cash into tangible, long-term contracts before a competitor does. The macro environment is also a headwind. As we've seen this week, the broader market is nervous about high-growth tech valuations, and any sign of a miss on earnings or customer deployments could be severely punished. This is not a stock for someone who can't stomach volatility. If you're using SoFi's SoFi Robo-Advisor, this stock is not for you. This is for the SoFi active investing crowd, the traders using Interactive Brokers for its sophisticated Interactive Brokers platform to manage a high-risk, high-reward position. This is a good time to ask for your take. For everyone watching, comment below. Based on this massive $200 million raise and the new hires from Apple, what is your 12-month price target for RZLV? So we're left with this fascinating picture. The expectation is a $3 gamble, a stock you might buy fractional shares of on Robinhood and hope for the best. The reality is a company armed with $200 million in fresh capital, a new leadership team poached from the biggest names in tech, a strong buy rating from Wall Street with price targets triple the current price, and a 194% quarterly surge in ownership from the world's largest institutions. The market is processing a massive amount of conflicting information. The volatility we're seeing